Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Tower Corporation Limited annual report. China Tower Corporation Limited provides a wide range of telecommunication tower infrastructure services in the People's Republic of China. At the core of their services are the construction, maintenance, and operation of base station ancillary facilities, such as telecommunications towers and public network coverage in high-speed railways and subways. The company offers various equipment and services to telecommunication services providers, including towers, shelters or cabinets, and ancillary equipment for installing telecommunications equipment. They also provide maintenance services that cover monitoring equipment operation, routine inspection, device breakdown handling, property upkeep, working environment protection, and operation analysis. In addition to these services, China Tower Corporation Limited offers power access solutions such as batteries, backup power generation, and indoor distributed antenna systems, connecting telecommunication equipment to receive and send indoor mobile telecommunication network signals. They also provide backup power services, battery exchange services, battery recharge services, and trans-sector site application and information services. Furthermore, the company offers integrated information, power generation, and energy storage services to its corporate customers. With a strong presence in China, China Tower Corporation Limited has established itself as a leading provider of telecommunication tower infrastructure services, catering to the needs of various industries and sectors. China Tower Corporation Limited market capitalization of $193 billion is significantly larger than the average industry peer of roughly $8 billion. This shows that China Tower Corporation Limited holds a significant advantage in their industry. China Tower Corporation Limited trades at a higher price-to-earnings ratio of 14 times and a higher price-to-book ratio of 0.82 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price to value than it appears. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap. The company maintains a moderate leverage profile, with liabilities making up 40% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 4.62%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified through an analysis of the key performance indicators extracted from various sources. On the positive side, the DAS business has been a significant contributor to revenue growth, with rates ranging from 9.5–14.2%. The Smart Tower business has also shown impressive growth, with rates between 14.2–14.4%. Additionally, the energy business has experienced steady growth of 7.5–7.6%. On the other hand, some areas have seen a decline in revenue. The tower business has witnessed a decrease of -0.3% to -2.5%, while EBITDA has also declined by -1.1%. Furthermore, there has been a decrease in tenancy ratio and TSB tenancy ratio, resulting in a loss of 1.1% and 1.2%, respectively. Other factors have contributed to revenue growth or decline. The number of tower sites has increased by 2.6%, while DAS coverage area in buildings has expanded by 19.5–19.7%. However, the average annual revenue per site has decreased by -1.2%. Overall, these indicators provide valuable insights into the drivers of revenue growth and decline, enabling informed decision-making and strategic planning. Net income for the company saw a significant increase of 8.4% year-on-year, reaching Rm 11,630 million. This growth in net income is a positive indicator of the company's financial health. However, profit margins tell a different story. The EBITDA margin decreased by 1.1% to 65.5%, indicating that the company may be experiencing some inefficiencies in its operations. On the other hand, the net profit margin saw an increase of 2.9 percentage points to 11.6%. This suggests that despite the decrease in EBITDA margin, the company was able to maintain a healthy net profit margin. The discrepancy between the change in operating profit margin across different pages highlights the complexity of the company's financial performance. While some sources indicate an increase of 6.3%, others suggest a potential decrease due to excessive capital expenditures. Regardless, it is clear that the company's profit margins are undergoing significant changes, and further analysis is needed to understand these shifts. The company's financial performance indicates a positive trend in its operating cash flow. The data from various pages of the report confirms this assertion. On page 11 and 28, it is stated that the net cash generated from operating activities was RMB 56,116 million, representing a 13.4% increase over the previous year. This upward trajectory is consistent across different sections of the report. Page 121 shows a net cash inflow from operating activities of RMB 56,116 in 2025 and RMB 49,468 in 2024. Furthermore, page 147 explicitly states that the company's operating cash flow status is positive. The summary on page 178 provides additional evidence, showing an increase in operating cash flow from RMB 53,011 million in 2024 to RMB 60,178 million in 2025. These figures collectively demonstrate a significant improvement in the company's ability to generate positive operating cash flow. The company's debt level and interest expenses have undergone significant changes over the past few years. Initially, non-current borrowings saw a decrease of 12.3% from RMB 41,084 million to RMB 36,025 million on page 119. This trend continued with no significant change in debt level reported on page 131. However, by page 149, net debt had decreased by 12.7% from RMB 89,944 million to RMB 78,148 million. The interest expenses also showed a decline. On page 121, interest paid for borrowings decreased by 9.7% from RMB 1,602 million to RMB 1,445 million. Similarly, on page 159, total finance costs decreased by 6.8% from RMB 2,639 million to RMB 2,446 million. Furthermore, interest expense on lease liabilities saw a decrease of 9.3% from RMB 1,169 million to RMB 1,061 million on page 166. Overall, the company's debt level and interest expenses have shown a downward trend over the past few years, indicating a reduction in financial obligations. Management is emphasizing the importance of investing in key technologies, IT, and R&D to drive future growth. This includes expanding service coverage, reducing costs, and improving efficiency. The company also plans to develop its smart tower business platforms and strengthen its battery swap and charging infrastructure networks. In addition to these short-term initiatives, management has outlined a mid- to long-term development strategy that involves reviewing and refining various aspects of the business, including product, marketing, sales, research and development, and talent strategies. This comprehensive approach will enable the company to make informed decisions about material strategic investments and financing proposals, positioning it for long-term success. The company's financial history reveals a consistent practice of paying dividends to its shareholders. As per the provided information, dividend payments are explicitly mentioned on pages 120 and 184. This indicates that the company has prioritized returning value to its investors through regular dividend distributions. While there is no direct evidence of share buybacks, page 171 suggests a possible implication related to share consolidation and capital reduction. However, this point remains ambiguous and does not provide conclusive proof of share repurchases. That concludes the financial summary for China Tower Corporation Limited. Feel free to comment below, and I will be happy to answer them when possible.